You know, when you hear the name Conagra Brands, it might not immediately ring a bell, but I bet you know Bird's Eye frozen veggies, or Healthy Choice meals, or maybe even Vlasic pickles, right? Well, today we're going to peek inside the financial kitchen of this food giant. We're breaking down their latest earnings report to see exactly how they're staging a comeback. Let's get into it. To really get a handle on a huge company like Conagra, you don't need to look much further than a gas station checkout counter. Think about the Slim Jim. It's not just a snack, right? It's a massive business, and its performance is a really key ingredient in Conagra's overall financial health. So this whole explainer is about connecting these products we see every day to the big, impressive numbers. And bam, right out of the gate, CEO Sean Connolly sets a really confident tone. After a bit of a slump, the company is growing again. Honestly, this one quote is pretty much the headline for our whole story today. Conagra is back in growth mode. And here it is. This is probably the single most important number from their entire report. Total organic net sales were up 2.4%. Now, that might not sound like some huge world-changing number, but trust me, in the massive, super competitive world of food and snacks, this signals a really significant positive turn. Okay, so you just heard me say organic net sales, and you're going to hear it a lot. So what the heck is it? Well, it's actually pretty simple. It's just a way to measure growth from the company's main existing business, selling more of the stuff they already make. It's like the purest signal of whether or not customers are actually buying more of your products. So the big takeaway is the company's growing again. But how? Where is that growth really coming from? Well, the first, and maybe the most important answer, is found in the coldest part of the grocery store. Right, so that 2.4% growth isn't just one thing. It's really a story of two very different and very successful strategies firing on all cylinders. And the first one, like we just hinted, starts in the freezer aisle. And this chart, wow, it just shows the comeback perfectly. After a couple of pretty tough quarters where they were wrestling with supply chain headaches, you can see this dramatic turnaround. In just this latest quarter, the actual volume of frozen food they sold jumped by almost 3%. That means people are literally putting more of their frozen meals and veggies into their shopping carts. What's really cool here is that this shows why that volume is growing. They're actively taking back market share from their competitors. So whether we're talking about frozen vegetables or single-serve meals like Healthy Choice, they've bounced back from those earlier issues and are reclaiming their space in the freezer. And this just drives the point home. It's not just one or two hit products carrying the team. A massive 88% of their entire frozen food portfolio is either holding steady or, get this, gaining volume share. That is what you call a broad, powerful recovery. Okay, let's move on to the second key driver of all this growth. We're leaving the freezer aisle now, and we're finding Conagra's other powerhouse, the snack drawer. And here we are, back to those brands you totally recognize. Names like Slim Jim and David Sunflower Seeds, they're not just part of the culture. They are serious growth engines for the company, especially in that on-the-go, high-protein snack category that's so popular right now. And the growth here is just really impressive. Sales for their trendy protein snacks, so that's meat snacks and seeds, jumped by 9%. That is a huge signal that their brands are hitting a nerve with what consumers are looking for. Now, this slide is where it gets really interesting because it puts all that growth into perspective. Conagra's snack business grew its sales by 4.4%. That's great, but it's even better when you see that the entire snack category only grew by 2.3%. They're growing nearly twice as fast as the rest of the market. They're not just growing, they're winning. Okay, so we've got strong growth in frozen, amazing growth in snacks, but what about the rest of the store? The canned goods, the cooking oils, all those pantry staples. Well, here, Conagra has a very, very different strategy. Yeah, in the business world, these are sometimes called cash businesses or cash cows. The goal isn't explosive, flashy growth. It's all about managing these reliable, well-known products to generate consistent profit. And that cash can then be reinvested into the high-growth areas we just talked about, like snacks and frozen meals. And this table just lays out the two strategies perfectly. Take a look at grocery and snacks, which includes all those staples. Sales grew because prices went up 4%, even though they actually sold a little less stuff. Now look at refrigerated and frozen. Its growth came almost entirely from selling more units, a 3.9% jump in volume. It's two totally different paths to growth, both working at the same time. Okay, so sales are up. It's being driven by volume in the freezer aisle and by price in the pantry. But what does all this mean for the company's bottom line? Let's do a final financial health check. And this is always the million-dollar question for any investor or analyst, right? It's great to sell more stuff, but are you making more money doing it? And here's the catch. Profitability, what's called operating margin, which is basically how much profit they make on each dollar of sales, it actually took a hit this quarter. And the reason is pretty simple: inflation. The costs of everything, from ingredients to packaging to shipping, went up, and that squeezed their margins even though their sales were higher. But, and this is a big but, there are other really strong signs of financial health. The company is generating a lot of cash, and they're using it smartly. As you can see right here, they are on track to pay down $800 million in debt this year. That's a full $100 million more than they originally planned. That is a fantastic sign of real financial discipline. So what does all this mean for the future? Well, Conagra updated its forecast. They expect sales to be relatively flat for the full year. But, and misses the crucial part, they expect their profitability, that operating margin, to improve and land near the high end of their target range. It's a signal that they believe they're finally getting a handle on those rising costs. So to wrap this all up, what we're seeing is a company that's executing a really smart two-pronged strategy. They're driving growth in the exciting areas like frozen and snacks while managing their classic staples for cash. The approach is clearly working to get sales back on track. The final question really is, in a consumer world that changes so fast, is this the right long-term recipe for success? I guess only the next earnings report will tell.